Afternoon. So give us your perspective on the trading we've seen this week. It does appear that it's all about the T-bill market, very little activity in the bond market.
Oh yes, it's always been about the T-bills market, and that's where we see a lot of appetite for the foreign investors and as well as the local investors. We've seen we've had three sessions this week. We've had one PMA and two OMO sessions this week. So we've seen rates steady on the short to medium term, whereas on the long term, the PMA closed lower than it did on the OMO section on Thursday.
Right. The market is obviously driven by liquidity. So what's the outlook for liquidity moving into next week? How do you see that playing out?
Well, I'm still seeing a lot of liquidity in the system coming in next week. We have maturities on Thursdays, and so we are hoping to see probably another OMO on Thursday. And we also have a PMA which will take place next week on the bond market. So we expect to see demand for the PMA as well.
Right. Now, earlier I mentioned that, and you confirmed that we've seen very little activity in the bond markets. But with what we're seeing with the elevated yields in the T-bill markets, what do you think is likely to happen to bonds? Are we going to get to a point where some investors pretty much just focus only on the T-bills, because the yields on the T-bills are very close to what you can get in the bond market right now?
Yeah, well, what we've seen so far since the beginning of the year is more appetite for the T-bills market than the bond market, and I don't see this changing anytime soon. We still see investors are interested in the short-term instruments. That's why we've had a lot of volatility since the beginning of the year, dropping from as high as 15% to current 13% on the long end of the curve. So it's the same appetite that's going to continue.
Some conservative, if we move now to the FX market, some conservative analysts have suggested that we're going to see some weakness for the naira moving ahead, perhaps into the second half of the year. I want to get your perspective on what you're seeing in the I&E window and what that could tell us about the outlook for the exchange rate.
Right, the I&E window has remained very liquid since the beginning of the year till now. The Q1 figures would actually be quite large in terms of liquidity for the I&E market. So going into Q2, I expect this would continue. The only challenge I see is if rates remain this high or if rates drop further, that's when I feel that we're going to have a liquidity squeeze and probably rates may go up on the I&E market.
Do you think that rates could fall in the T-bill market? From the central, I know the central bank governor was speaking about this yesterday. He's suggesting that monetary policy will remain tight in the foreseeable future. So if that's the case, then I think it's very unlikely that yields are going to go down.
No, it's still a demand and supply game. As long as the demand remains for the T-bills, we see probably rates will drop, unless they increase their offers. So with so much liquidity chasing the same bills, that's what's brought rates down thus far, and it may continue that way.
I want to get your thoughts on foreign investor interest in the fixed income market and how that impacts local liquidity. So typically, if a foreign investor brings in dollars, I imagine that they will have to convert that dollars to participate in the local market. Now, that, I imagine, is to some extent extracting some liquidity from the naira market. Would you agree? And if we continue to see foreign investors get invested in the local market, what's your view on the impact on liquidity?
No, I say liquidity would actually increase, and it's actually better for the foreign investors to come in, change the naira, and then go in, because Nigeria gains both ways. One way is that our rates will drop, the naira will become stronger, and also there will be a lot of liquidity in our bills and bonds market. So and also the government gets to save on excess spending, so rates will drop there. So both ways the Nigerian economy gains. And even on the liquidity side, it's not the same day the foreign investor comes in and converts that he gets a T-bill or a bond. So that liquidity might remain in the market.
Right, let's wrap this up by getting your outlook for the markets, starting with the fixed income markets, and then, of course, the exchange rate moving into next week.
All right, I find the fixed income market will remain stable going into next week. We don't see any big surprises. There was an original sell-off prior to the auction on Thursday, but after the results came out, participants bought it back to its current level. I expect it to still trade around the same levels going into next week, and also for the foreign exchange market, liquidity is still in the market, so I don't see any sharp demand that's going to drive rates out of the current rate band where it's trading.
All right, we have to leave it there. Thank you for joining us today.